Hi everyone, welcome back. Today let's see about ITC, that is Input Credit Tax. What does ITC? ITC means while paying the tax on sale of goods and services, you can avail the tax you have already paid on the purchase, that is on input of the above goods and services, and pay only the balance amount as tax. ITC includes CGST, SGST or IGST that's paid on input goods or input services, etc. And there is one more word that you need to understand is the end user. End user means the consumer, the one who does not sell the product, that is the end user, and end user does not have any claim on GST paid by him. So these 2 points you need to keep in the mind while solving the sums. Let's understand more about ITC with the help of an example. ITC means input credit tax. Consider this example. For a registered dealer, the input tax paid by him is rupees 30 and the output tax is rupees 50. Then input tax credit for the dealer is 50 minus 30, that is rupees 20, and this 20 rupees will go to the government. We have already seen that the tax is calculated on the selling price. So here, after making the purchase of certain product, he would have increased the price of that, and the output tax will be calculated on the selling price. And here in this particular point, the tax paid while making the sale is rupees 50, and the input tax, that is the tax paid during the purchase of the product, that is rupees 30. And then the ITC, that is input tax credit, is calculated as the output tax minus the input tax, that is 50 minus 30, that is rupees 20 is the actual tax that is paid to the government. So the tax liability is same as output tax minus input tax, or the tax on the profit. As I have told you here, the tax paid by the dealer is 30 and the tax charged by him is 50. So ultimately he is making a final payment of the tax as only 20 rupees. That is the tax paid on the profit. So we can say that the tax liability is the tax on the profit, and here the ITC means input tax credit, and that is calculated as output tax minus input tax, and that is the net tax paid to the government. Let's understand the ITC more clearly with the help of an example. A dealer in Agra supplies goods worth rupees 1000 to a dealer in UP, that is to Jhansi. That means these transactions are happening in the same state, UP itself. The dealer in Jhansi supplies the same goods to a dealer in Mumbai at the profit of rupees 600. Assume that Mumbai dealer is the end user and the GST rate is 12%. Find the input tax for the dealer in Jhansi, output tax for the dealer in Jhansi, and the net GST paid by the dealer in Jhansi, and the total cost price for the dealer in Mumbai. This is the question. Here we have to understand so many points. The first one, what were the transactions happening in Jhansi and in Agra, that is in the same state, and how we can calculate the tax. Then from Jhansi to Mumbai, when the transaction was happening, what were the changes were there? Based on that, you need to calculate the input tax, output tax at the same place Jhansi, and what is the net GST paid by the dealer in Jhansi, and the final cost price for the dealer in Mumbai. Let's write all the data first and then solve the sub questions one by one. As per the question, so the goods and services were from Agra to Jhansi. So intra state transaction is happening here. Therefore, we need to calculate the GST as CGST and SGST. Here in Agra, 1000 rupees is the selling price. So the goods and services is from Agra to Jhansi. Therefore, the selling price is 1000 rupees in Agra. Selling price is rupees 1000, that is in Agra. The selling price for the dealer in Agra is rupees 1000. Since it is intra-state transaction is happening, we need to find the CGST as well as the SGST. So CGST is equal to, here it is given that the GST rate is 12%. Therefore, CGST is 6% of the selling price. So selling price into 6% of the GST. So and that is same as rupees 60. 60 is the CGST paid by the dealer of Agra. Therefore, the SGST is also 6% of selling price, and that same as rupees 60. Therefore, the total tax paid by the dealer in Agra is 60 plus 60, that is 120 rupees. Here the total tax paid by the dealer in Agra, that is 60 plus 60, that is rupees 120. So here the selling price of the goods or services in Agra was rupees 1000. That means the sale was happening there. So the tax paid on sale is the output tax. We have seen that the tax paid on sale is the output tax, and that is same as rupees 120 here. That is for the dealer in Agra. And the output tax for the dealer in Agra is same as the input tax for the dealer in Jhansi, because the transaction is happening from Agra to Jhansi. Both are in the same state. So here the output tax for the dealer in Agra is rupees 120. Therefore, the input tax for the dealer in Jhansi is 120 rupees. Here it is the input tax since the purchase is happening. In case of Agra, that was the same. Therefore, the input tax for the dealer in Jhansi, input tax for the dealer in Jhansi is rupees 120. So that was the first part of the question. Here we have to find the input tax for the dealer in Jhansi, and that is same as rupees 120. And in the next part, we need to find the output tax for the dealer in Jhansi. So when you are finding the output tax for the dealer in Jhansi, we need to know what is the selling price when the services are happening from Jhansi to Mumbai. So here the input tax we have already calculated. Now the cost price. Cost price for the dealer in Jhansi. Cost price for the dealer in Jhansi is 1000 rupees. That was the sale price for the dealer in Agra. Here the cost price is 1000 rupees and the profit is made as 600. Profit is equal to rupees 600. Therefore, the selling price is 1000 plus 600. And that is same as 1600. This is the selling price for the dealer in Jhansi. Selling price for the dealer in Jhansi is 1600. And the tax GST paid when the transaction is happening from Jhansi to Mumbai. That means the output tax. Here the output tax paid by the dealer in Jhansi. Output tax, I have told you, output tax means the tax calculated on the sale. Here the selling price is 1600 and the output tax is 12% of 1600. Here we are calculating the output tax GST directly since the interstate transaction is happening. That is, the transaction is taking place from Jhansi, that is UP to Mumbai. Therefore, the interstate transaction is happening. That is, from one state to another state the transaction is taking place. Therefore, the GST is 12%. So here we'll get the GST as 192 rupees. Therefore, the output tax for the dealer in Jhansi, output tax for the dealer in Jhansi is rupees 192. And now we need to find what is a net GST paid by the dealer in Jhansi. So net GST is, as I have told you, net GST is calculated as the difference between the output tax and the input tax. The output tax for the dealer in Jhansi is 192 and the input tax for the dealer in Jhansi is 120. So the difference between these two will give you the net GST. That is rupees 72. 72 is the net GST paid by the dealer in Jhansi. Now the last part of the question was the CP for the dealer in Mumbai. Cost price for the dealer in Mumbai. And that is same as the tax paid by the dealer plus the selling price. And this is same as the selling price of the services, goods or services, as well as the tax paid for that. Here the selling price, that is from Jhansi, the dealer is selling with a cost of 1600 to the dealer in Mumbai. Therefore, the cost price is 1600 plus the GST paid by him. The GST for 1600 is, we have seen this is 192, and therefore the cost price for the dealer in Mumbai is 1792 rupees. Here the dealer in the Mumbai is the end user. Therefore, this dealer cannot claim the tax on the same transaction. So these are the different parts of the questions. So the first one, since the intra-state transaction were happening, we were finding the CGST as well as the SGST. And then always remember, when the sale is happening, that is the selling price, and the tax calculated on the selling price is the output tax, and the selling price for the dealer in Agra is same as the cost price for the dealer in Jhansi. Here the tax paid by the dealer in Jhansi is the input tax, since here the purchase is happening. Whenever the purchase is happening, there we are paying the input tax, and when the sale is happening, there we are paying the output tax. And always remember, the net GST is the difference between the output tax as well as the input tax. That's all for now. We'll meet you in the next class with some more sums on the same topic. Thank you.